Let's take a look at some charts on Bitcoin from this week's article on Brave New Coin. So there's a lot in the article. There always is for Bitcoin because there's much more data on Bitcoin related things and trading and institutional volume and that sort of stuff than any other coin. So it's a long article. There's a lot in there. I will highlight the important points. So we have hash rate and difficulty. Bitcoin is a proof of work coin. It adjusts for a 10-minute block time every 2016 blocks. And you can see those difficulty adjustments here every 2016 blocks. And you'll see this stepwise difficulty, unlike some other coins that have very fast difficulty adjustments where they just readjust. So you can see recently we had a big difficulty drop, and difficulty has regained all that subtraction, and hash rate as well. So hash rate's at an all-time high. Difficulty may or may not be at an all-time high in the next 5 days when difficulty adjusts. But somebody's adding hash rate even with having coming. So there's either newly efficient miners that are being deployed, a drop in electricity somewhere, or a hidden ASIC that no one is aware of yet that's being used and mined. There's some ASICs that were just released in May. So my guess is, if you buy ASICs months in advance, knowing that halving's coming, even if it's break even or you're losing money in the near term, you're going to deploy the miner anyway. You're not going to not unbox it, not plug it in, right? You already paid for it. So the people who can deploy those new ASICs, regardless of cost, are going to do so to just try to recoup money, so long as the overhead isn't breaking their back in the meantime. Looking at halving, obviously just happened, 630,000 block, and inflation is now around 1.8%. It'll hover in and around that zone depending on block times. If we're below 10-minute block times, inflation will increase slightly. If we're above 10-minute block times, inflation will decrease slightly. But in general, it's going to be around 1.8% until 2024. And inflation is now lower than gold on Bitcoin. Looking at transactions per day and average transaction values haven't really changed that much since July 2019. There isn't a bunch of big transactions being sent on the network right now, which I think is a good thing. The more we get these big whale transactions, the higher the likelihood that there's a local top in price, I think. That's how I'd read this anyway. So we're not seeing a spike in any abnormality from that perspective. Transactions per day has rebounded from the drop. This was somewhat related in the block times in the last difficulty drop. So if hash rate drops before the difficulty adjustment, you're going to get a decrease in block times, and that's going to affect transactions per day slightly. It won't explain this entire drop. It'll explain some of it. But now we're back up basically to previous levels. The theme for every chart you're going to see is up and to the right, because any metric you look at Bitcoin right now, on-chain data, volume, price, everything's moving up. Looking at block sizes, which is the fill, and fees, which is the line here. In general, fees have been quite low despite block sizes pushing 2 megabytes. 2.2 megabytes is technically the ceiling with SegWit, so we're not quite there yet. Fees have been basically flat until very recently. So you're seeing a lot of transactions all at once, which is a part of that. In general, if you see, fees spiking like crazy, that highlights scalability issues. Not currently the case. It's certainly more expensive to send Bitcoin transactions than it has been in the past 10 months, but nothing too crazy yet. Seeing block sizes increase is bullish. It says there's demand for transactions that are on-chain. These aren't cheap, so this isn't spam. These are legitimate transactions. And if you compare this to like a feeless blockchain where block sizes are full, it's like night and day. Apples and paperclips doesn't really compute, because if it's free, why wouldn't they always be full, right? Someone's always going to do something with the space. They're going to spam it. They're going to use it for dApps, whatever. Bitcoin isn't exactly dApp friendly from that perspective. Looking at NVT, the line here, inverse metric of economic utility, and monthly active addresses here. You can see monthly active addresses are at a 2-year high, basically. The last time monthly active addresses were this high was during the bubble of 2017, early 2018. So there's definitely demand there, organic. It's hard to fake this month over month. Day over day, you can spike transactions, you can spike addresses, but a continuous increase it says that there's organic demand. At least to me, that's what it says. NVT, the more I look at NVT and all these coins and talk about it, the less I think it actually matters for anything. In a vacuum, NVT has this uptrend here, which may be inflation related, maybe off-chain transaction related. Inflation is the wrong word, upward trend, but you can see despite increase in transactions, despite average transaction values being flat, transactions per day, all this on-chain data is robust and vibrant and increasing, but NVT is not decreasing. So I'd expect the NVT to decrease if all these metrics are increasing in the ways that they are. Right now, NVT is historically in the upper third. If you separate it between 120 and 20, relatively high to where it's been historically. So it's hard to look at NVT seriously when everything else is saying we're moving up, we're moving up, we're moving up. This is MVRV. It's a measure of market cap versus realized cap, or coins that are actually moving on the chain. You can see we dipped down briefly below the buy zone. If you just treat it as an oscillator, sell zone, buy zone, we're nowhere near the sell zone. So plenty of upside here for price to move up. March 12th on the price drop, we had a massive drop in MVRV, which was a decent buy signal. Looking at CME, this is institutional cash settled futures. Open interest hit an all-time high. Daily volume definitely spiked to a multi-month high surrounding the halving. So there's a lot of likely hedging on CME during and around the halving. That OI is probably going to dissipate slightly over the next couple of weeks. I don't expect it to just keep surging unless price blasts past 10K, which I don't think is going to be the case. Looking at Backed, which is both BTC settled and cash settled, you can see that their physically settled volume either matched or just barely exceeded the previous all-time high. So there's a lot of interest on Backed as well. And OI was definitely at a multi-month high. So it's good to see entities actually using these institutional trading platforms, specifically Backed because it's physically settled, which is a lot more impactful than cash settled stuff on CME or Backed. I don't really talk about OTC volumes on localbitcoins.com ever, but we finally stopped the downtrend of global volume, and you can see we're moving up, getting week over week highs in global volume on local Bitcoins. It's a good sign for Grassroots organic growth. Same thing with Google Trends. We're making higher lows on this metric, so it's still below 25, relatively low. It's not above June, July last year as far as interest, but there's been a lot of just continued low interest in Bitcoin searches. What is Bitcoin? Where do I buy Bitcoin? What is Bitcoin having? A lot of articles on Bitcoin having. All that sort of thing should pop up when you look at the Google Trends for the word Bitcoin. Looking at technicals, we have Bitfinex open interest, long, short up top, yearly pivots, 50 and the 200 EMA, VPVR, volume, and RSI. First thing that immediately pops to me is this VPVR 5200 and yearly pivot zone around 8200. So that would be a massive, massive, massive support should we revisit that area. Unlikely to spike through that area anytime soon, just because both EMAs are there. Big volume area, yearly pivot. Upside yearly pivot resistance is around 13K. Previous highs around 13K. Not really any volume up there, but there's plenty of confluence that we're not going to just blast through 13 if we do make higher highs here. In general, when we get these crosses on the 50 and the 200, we typically retest the 200. We did not in this case on this cross. We didn't test this red line here. And these 50 and the 200 crosses over the past year have been lackluster as far as bearish or bullish continuation. You know, they aren't these multi-month uptrend, downtrend sort of thing. It's just been pretty much a ranging mess. So we'll see how valuable this cross will become in the weeks to come. Isn't going to help you in the near term. It definitely says we're leaning bullish. It's just hard to take it seriously because we've crisscrossed several times now. But the buy zone, again, would be at that 8200 massive support level. It would meet the criteria for the retest of the 200. You know, here you had the bearish cross, retested the 200 a couple times, and then collapsed. That's what I'd expect to see in the opposite direction here. I'd expect us to retest the 200 eventually. As far as OI is concerned, it's mostly long, but it's nothing crazy. The crazy OI right now on Bitfinex is on ETH. It's hitting all-time highs in notional and the long side. And lastly, looking at the cloud here, I wrote an article back in April about this Kumo breakout it isn't typically as explosive as it was here, just massive continuation immediately. Usually you get this slow breakout and it retests a few levels. This is a rare occurrence where it just was full bore on the first breakout. The cloud here is telling you look for longs. It's also telling you be careful holding or going long up here because of this TK disequilibrium. You can see the T and the K, the Tenkin and the Kijun lines are very separated. Similar to that 8200 level, the cloud likes 7100, which is where the Kijun and the cloud is. So if we eventually do break down to 82, I expect the Kijun to meet price at that point. But right now it says be very cautious on the long side still, even though we've retested the Tenkin. We had a Tenkin bounce on the daily, which you'll see occasionally if the trend is super strong. But I'm not super confident in bullish continuation until we blow out the long side a little bit more, retest the Kijun, and from there it should be good to go for bullish continuation.